Do you feel like Jay Powell and the Fed are in control?
They've got a dual mandate and they've got this very tricky job of trying to balance both the sides of the mandate. I think what we heard from Chair Powell yesterday, I mean, the 75 basis points had been priced in. Over the last few days, the market was already priced for it. I think we heard he tried to counter some of the negatives. He said, that the next meeting doesn't have to be 75. He tried to say 75 is not the new 25. He also tried to keep price stability, huge commitment to price stability, tried to talk about the softish landing. But here's the biggest problem. The Fed is responding to inflation, which responds to a pretty big lag. So, I think they're going to keep hiking. We expect a 75 in July. We expect 50 basis points until then. We expect a terminal rate of 4%. And the economy is already starting to slow. I was a little surprised with the reaction right after because the Fed is calling for cuts in 24. They've got the unemployment rate rising. I mean, it's very hard to finesse monetary policy when the unemployment rate is rising. It tends to run, and that's this hard landing scenario. So I think they did the best that they can. But the problem is inflation's much too high and they're going to have to slow things down. And I think the long end is already telling you that things are going to slow down because the economy responds much more to long end real rates, and they've spiked a lot in the last, couple of months.
Correct me, please, if I am wrong, and I certainly might be, Priya, but I do not believe, at least in maybe the last few recent decades, don't take me back to 1912 or something like this, I don't think we've ever hiked rates in a slowing economy and not had a recession. Have we?
Right. I mean, there are some episodes, no, not this pace of rate hikes. In fact, 94, you can argue, was a bit of a soft landing, but it was very tough for the market. I mean, we had, Orange County, the tequila crisis. So even if they are following the path of 94, and actually it's not clear that inflation comes down quickly enough, I think that slowdown we'll have to navigate that slowdown next year. It's all about, are we slowing down, to a growth recession, which is what the Fed is calling for. I'm a little more nervous that the combination of rate hikes well over neutral, we're talking 4% Fed funds, quantitative tightening, which did not happen in 94. So that's adding to pressure as well. And a Fed that's extremely nimble. And so I think volatility stays very high. They're moving data point to data point. So we're in the hard landing camp, thinking that growth is not just going to slow down to 1.7 as the Fed's forecasting. We're looking at a potential recession or very close to zero GDP. It's going to be a really tough market to navigate with high vol, which is, never great for investors to hear.
It's 5:10 in the morning, Priya, so I'm going to ask what sounds like an insane question, so I apologize. I'll blame it on the hours. At what point do we start talking about rate cuts? I know that sounds ridiculous right now, but I feel like the Federal Reserve is slamming on the brakes because they see an accident. They're driving down the highway, see an accident, slamming on the brakes. But once we go around that, which is going to be a recession or a major slowdown, they're going to have to gun the gas once again. Is it too soon to start talking about that?
No, and I think it's a good question because I've been getting that question where's the Fed put on the stock market? I think that's very clear. They want to tighten conditions. There's no Fed put there. But for the last 30 years, there's been a Fed put on growth. So when growth starts to slow down, the Fed should start to slam on the brakes. Here's the problem. If inflation is much too high, I don't want to use the word stagflation, but basically I'm arguing for that scenario. Growth slows down, but if inflation stays well north of 2% or 3, 4, and Chair Powell talked about headline inflation, which I thought was actually very negative because the Fed really can't control the price of gas or food. But they're looking at headline inflation. If headline inflation stays high, how can they slam on the brakes? That's the issue. And they're telling us that, I think that was very clear yesterday, that price stability is the number one goal. So, I mean, we are looking for rate cuts, I have to say, in 2024. Late 23, it could start late 23. There's a lot of time between now and late 23. Even if things start to slow down, I think we'll hear from the Fed saying it's slowing to potential. When it's clear it's slowing below potential, I think they're going to have to look at inflation. And if it's too high, their hands might be tied. I think they can stop hikes, but I don't think they're cutting rates if inflation's well north of 2%.